Hey YouTube, this is Zach with Achilles Financial, and today we're going to talk about a very popular stock right now, NIO Inc., or just more commonly known as NIO. And as you can even see right here over the latest news, will Tesla or NIO stock grow more by 2025? And the short answer to that question is we have no idea. But NIO is a electric EV company. We've talked about them earlier last week, and I want to show you how I'm going to be playing their earnings along with Xpeng or XPEV, which is another Chinese EV vehicle operator. So there are three key operators right now in the Chinese electric vehicle auto space. They are Li Auto, they are NIO, and they are going to be Xpev or Xpeng as well. The other one not included there because it's not a Chinese company is of course Tesla, because China is encouraging and allowing Tesla to expand its presence there. So the question or the reasoning why we're talking about a stock that even since I've last talked about it is currently up another $5 is that they have earnings this upcoming Tuesday and Xpeng has earnings tomorrow. So the reason that I highlight that information is because we're going to be learning a lot about the Chinese electric vehicle industry here shortly and how we can play that. So do I think that the stock currently is worth a $43 price tag? I do not, and the reason for that is, even if we just look at the valuation, this is off of not today's numbers, but you can see that they're currently running at just a price. They don't have price to earnings because they haven't had a full fiscal year, but they've got price to sales of 35x, and that is not going off of today's number. So again, this is even behind now off additional monstrous growth. So I read an article earlier today where essentially one of the reasons they were not recommending NIO is because their current pricing means that they're going to grow sales or grow revenue by 6% for the next 100 years to merit that price increase. So again, while that is understandably unreasonable, this is a company that isn't looking to grow by 6%, and kind of like Tesla, kind of like the electric vehicle industry as a whole, it has kind of that cult following. So that's what we're going to be looking at, is essentially what are we expecting going forward. And tomorrow, or rather the big one that we want to be looking at is Xpev or Xpeng, which is going to be announcing their earnings tomorrow, and in particular they're going to be announcing the deliveries tomorrow. So you can see tomorrow that the expectation is that they are going to be having a negative 17% on the non-GAAP estimate, and that is on the EPS or earnings per share basis. The big thing that people are worried about is not necessarily those numbers that you see right here in Q3 and Q4, but rather how many vehicles did they deliver. So this is another company that has just absolutely ballooned in the space. But the big question is, how can we play them, and is it worth putting a lot of money into these stocks that, again, are they going to warrant such high valuations? You've got Xpev at a nearly $24 billion valuation, which is in line with GM. The reason why I say that this is insane is because in the last quarter, I believe Xpeng delivered like less than 10,000 vehicles. It was like a couple thousand vehicles per month. So NIO is the one that's kind of farther along, which is why we're going to be talking about them. But I'm just going to show you real quickly how I plan on playing these stocks. So let's head over to Thinkorswim. So we are now in the Thinkorswim web-based platform. You can see I've got the company NIO up in the top left-hand side. I've got my chart showing the past week. Again, if you are new to this platform, it can be a little confusing, but I just want to highlight some of the different ways you can play this. So as you can see, we've kind of been trading in this range in high anticipation of what's going to happen tomorrow. What I would be looking to do is I'd like to purchase 100 shares. Okay, so that investment is going to cost you $4,300. Second to that, so if you have $4,300, what I want to do is I want to sell a covered call. So again, sell a covered call. This is my right to 100 shares. So just to showcase what that looks like, if I go all the way out to December 4th, so this is going to be another 23 days from now, and I say, hey, this is going to be a $50 investment, or I'm going to sell this for 50%. As you can see, we now have a potential of selling this for $300. So someone is going to pay me $300 for this call option. So if I'm buying the stocks at $43 a share or $4,300, instantaneously I am going to get a $300 benefit. So if I just hold that investment, that instantly guarantees me a 7% return on my money, or again, 300 divided by 4,300. So what is the next step there? What happens if the stock does go up above $50 a share during that time period? Well, you still get to keep the difference between the $43 you purchased it at and the $50 that it would sell at, plus you get to keep your $300. So let's say that it does go up and you lose that money, or rather you lose those shares because it sold at $50. You would still get $7 per share. So that's $700 that you would make in 3 weeks if the stock continued to skyrocket. Now, let's say that the stock goes up and then it sells. Now all you've done is you've made a total of those 2 steps of the covered call and then the shares going that you've made $1,000, $300 from the option that you see here, as well as the $7 difference. So that 1,000 divided by 4,300 would be a 23% return on investment over the course of 3 weeks. Now, what happens if you don't, or if the stock does not go above that? Well, you still get your 300 shares. Now, I now have $300. What am I going to do with that $300? What I would then do to make this exact same play is I would go over to Xpeng and I would buy 10 shares, or as many as I could get with that $300. So now I have exposure kind of across the market. What I'd look to do, as long as I hold those other shares of NIO, is build into 100 shares here, and now I can just buy covered calls, covered calls, covered calls. So in the worst case scenario, due to the fact that these stocks are incredibly volatile, as long as I have the 100 shares, I can keep rotating this. So for example, if I said I didn't want to wait till December 4th, I wanted to wait till next week, I could go closer to the money. So that $43, I could go down here to 47 and still make $236. Is there the chance that this stock could pop off and it could go really high? Yes. However, due to the high valuations, these stocks could also crash back down to reality. On the reverse side, if you sell this, what you can do is you can do the put option, which means you will sell your stocks at this price. However, what you can do is go out next week and say, hey, I think the stock's going to drop. I still want to buy in. You could just do a covered call or a cash secured put, and someone will pay you $60 for you to buy all their shares at $35 a share. So there's a lot of interesting ways that you can approach this, and this is just one avenue of how you can have exposure to these stocks. And again, for a relatively small investment of $4,300, you can lock in some money and get some of that recurring info or recurring cash from selling those covered calls, just by virtue of the fact that it is a naturally high volatility stock. So that's what I'm going to be looking at doing. I'm going to continue to watch this, and I am very much so going to be interested in seeing what happens with Xpeng tomorrow. So if you found this content helpful, please leave a like below and subscribe. Thanks everyone. Talk to you later.